Morning all, it's the 5th of March 2014. And starting off with the daily chart, we can see the market certainly got into this tight trading range. The market yesterday trading just between 50 pips, and just to remind you, the grey lines here, they are 50 pips apart, which is a great visual to enable us to see what the trading range is by having just a quick eyeball of the chart there. So we're only just over 50 pips yesterday, so the market's becoming narrower in its trading range. So this is something to keep in mind. But of course, conversely, at some point the market will break out of that as well, but it can be very frustrating when the market's trading in a sideways range, which is why you have to sometimes just go down to the smaller time frames if you want to continue to trade. This is something that I have covered in the previous market views and are available in the market view section of the site. So the market fairly quiet there this morning. Let's have a look on the 30-minute from yesterday. We did get a move. You can see the 50 pips there, but unfortunately we didn't get a signal beforehand. You get the psychological support here, and there is a trading strategy that can be built around these types of things as well. So you've got the market trading above the psychological layer with the green. There's nothing to stop you going 50% above, and the same when you get the red bars coming back through, you know, tucking underneath these psychological areas. Because if you go back and have a look at the charts from times, you know, historically, you will see that the market likes to bounce off these areas, and if it comes through as it did here, you can see that the selling disappeared immediately and the market then came back, and then once it closed back again, stop loss, whoops, there we go, stop below the bottom here, and away you go, in the same stop above the top. So there's definitely something in there. Again, you can see this here as well. So it's something that's worth looking at, certainly when the markets are stuck in these ranges. So let's have a look at the news, see what's out, as there's not a lot else to report this morning. We've got Spanish, Italian, services PMI from the UK, and well, we got retail sales from Europe, not really an issue. Now we've got the non-farm payroll figures out at 1:15, so this will be an interesting one. We should get a bit of movement from the market there, especially if they've been fiddled yet again, as they were last month. So keep an eye out for that one. And you've got non-manufacturing PMI as well. Crude oil inventories, which is released each week, which doesn't really affect us too much as far as the currencies are concerned. So fairly quiet time there as well. Let's just go back to the daily chart, see if I can get anything else here from for you. Just drawing a few lines. Let's have a look. Let's go to annotations, and we've already got the high to the low there, where the market stopped at the 76%, which we saw not so long ago. I think that was Friday. Yeah, Monday, Tuesday, we're now on Wednesday. So the market trading there. Also, let me just show you this as well, because you can use these anywhere in the market. You can see there that the market's now left a new high behind. We could mark up for the upside momentum, but we can also mark to see how far the market's going to come back. And for me, this is the first low. It's lower than the previous low, and we've got this high left behind as well. So I can sort of click here and click here, and you can see the market came back and stopped at the 76% there as well. I'm just going to remove the 62. So you can see the market holding support there, and that's why the market's stopping at this level, which happens to be the 166.50 as well. So again, no surprise when we see this in the daily chart, where the market's found this support. Sorry, in the 30-minute, where you can see the market coming off and see driving down to that level, then bouncing back, and then holding support at this level as well. I've just noticed, actually, because I've had to reload all of the charts this morning, had a bit of an issue. I've just noticed the pivot points are not on the chart. So let me just apply these to all of the charts, so it looks more like it should do. And the 60 minutes just and there we go. And we'll just close that off and just save that as well, so that they're on there. So yes, using the fib retracements, I can actually see where the market's likely to find support from the bigger picture into the shorter time frames as well. And of course, if this is a bottom now, the market could trade higher, so I can come to the top, down to the bottom, and that gives me the targets where the market's likely to struggle as well, which happens to be bang in between this 50 pip range here as well, between which will be, let's just have a look, it's going to be 167 to 167.50 there. So just a few little tips there of what you can do as far as the bigger picture is concerned, and you've seen before in last week's market views how I transpose those figures across using the horizontal line to lines there, and then just turning them to whatever colour you want, and then just dragging them in with those prices. If you have not seen that, then go back and have a look. I think it was Thursday and Friday of last week. Well, that's it from me. There's not a lot else we can really do. It's down to the market to make some sort of a move. It's been extremely quiet on the overnight market. I mean, we've barely moved 10 pips there. So there's nothing we can do about it. We're subject to what the market wants to throw at us. That's just part and parcel of trading the markets. Sometimes it's quiet, sometimes it moves in big moves, and we get one or two of those a month. But of course, at the moment we've got this bit of a sideways pattern going on, but at least we are aware of it, and that's the most important thing. That's the great thing about looking at the bigger picture, because it enables you then to see what is likely to happen in the shorter time frames. Whereas if you just looked at the shorter time frames, you'd be sort of wondering why the market isn't moving or why it's doing what it's doing. As soon as you step back and see the bigger picture, and that's in anything in life, you then remove yourself from the detail and you can see exactly what is going on. It enables you to make then considered judgments and decisions about what it is that you want to actually do. Right, that's the philosophy lesson over this morning. I will see you in tomorrow's market view. Have a great day, and fingers crossed the market starts to move. I will speak to you tomorrow. As ever, thanks for watching.